I have in the second segment, Mr. Mukhtar Mohammed is the CEO, Finance with Mukhtar, joining me to share other perspectives on what's been happening in Nigeria and in the global space as well. I mean, thank you so much for joining us.
My pleasure.
So it's been an unnerving week, especially for the Europe and in the US, especially for the banking industry. We've seen several banks. We've seen Silicon Valley Bank. We've seen Signature Bank. Credit Suisse joined. And now Deutsche Bank, has joined the list of banks, with the credit crunch problem, What's next? What do we dare say will happen next? Will that filter into Africa? Are we protected here in Nigeria? What should we expect from this?
I think what's happening is what we call the market is in a panic mood, and so people react, not respond to the market, and the market is in a panic mood. But when we talk about Africa, we have nothing to worry about as it stands now. If you look at Signature Bank, is a one-shop bank. It operates for cryptocurrency traders. And that space has been going through its own challenges. So there's nothing that will immune the bank that is the funding of crypto to be immune from that. When you look at Silicon Valley Bank, it also was created specifically for the tech company and for startups. And the tech companies and the startups had their own challenges. And so it filtered back to the bank. Now, with Silicon Valley Bank, it's even funny that the government just decided to step in immediately because of the snowball effect it may have in the mortgage sector, because they were in turn trying to sell off their asset after selling off some of their bonds, long government bonds that were supposed to hold for 10 years. But when those startups needed their money because of the challenges, some of them needed to pay off some of their staff, they were retrenched. So that caused the challenge. So they need to go and sell their bond. And at that time, the value of the bond, because of the hiking interest rate, came down. And so they had that challenge. Now, remember that challenge was just within that space of those tech companies and the startup. Now, where Africa should have been scared of, if you had Morgan Stanley or you have Bank of America, we must know that Silicon Bank is the 15th largest bank in America. So normally, because of the special nature, we don't have so much startup here in Nigeria yet. Most Nigerian startups just tend to get money through funding from other means. So we don't have a startup bank or the partner one bank towards doing startups. So that immune Nigeria and Africa from it. So the challenge is, but we need to get ourselves prepared in case there's a effect. When I say the market will panic. And now you saw that happen to Credit Suisse before you know that it came now to Deutsche Bank.
But what lessons would you say stakeholders in the banking industry should learn from what has happened now?
I think diversification is the key. You must diversify, and that's why the Nigerian banks are fine, because we are not just a one-shop bank. Now the banks are formed holding companies. Those holding companies are involved in other things, real estate, payment system. Some of them are acquiring assets outside the shop, Nigeria. So some of them are into a lot of, it's not like a one-shop bank now. It's not one-shop bank now. It's a diversified portfolio. So that also will help the Nigerian bank. And then in terms of liquidity, we must give it to the CBN. They've been able to keep that liquidity ratio. Even when everything was stable, they make sure they make liquidity ratio of 35%, which is fantastic. So that means most Nigerian banks are liquid. Even if you follow the trend last week, they said most Nigerian banks are not even patronizing the CBN windows again for liquidity. So that shows that in terms of liquid, Nigerian banks are very liquid. Now, what happened to Silicon Valley Bank is that they were not as liquid in terms of cash. They invested in other instruments that they needed to cash out, and they were cashing out at not at a good time.
So that is something, a lesson learned, and we see that Nigeria, thankfully, and other African countries were not, at risk of a contagion at the moment. But speaking of diversification, you mentioned that earlier that banks, should diversify their, portfolios or their investments to not be, mono. Trading in a mono market. We see Access Bank Zambia, the subsidiary of Access Holdings, one of the holding companies, getting the approval of the Central Bank of Zambia to merge with the African Banking Corporation. Now, that's good news for the Access Holding Company, but how is that good news for investors? Can you tell us how investors in Nigeria can benefit from that development?
I think the great thing is that
because if that happens, it's said to be one of the top 5 banks in Zambia. If that merger, that transaction happens.
Well, you need to look at Access Bank. What are they trying to do first? They say they want to be one of the first 3, one of the first 3 largest banks in Africa. So this is not the first acquisition they are doing. They have acquisition in Kenya, in Zambia. I think they've done also in South Africa. They've done in Botswana. So they are expanding because they want to become an African bank, not just a Nigerian bank. And again, now they have the holding bank structure. So it's meant for investors to take opportunity of that. But again, you must be cautious, because when you're acquiring a bank like that, you don't see the dividend immediately coming in. If you look at Access Bank subsidiary outside the shore of Nigeria, their contribution to the Access Bank group is I think it's about 20%. So they're saying they want to move it to 50 or 70%. So Nigerian subsidiary is still the highest contributor of revenue, income to Access Bank. So what we'll see in the short time, you won't see those numbers telling up and investors gain in. Now, Access Bank now becomes a long-time stock for investors. And at the moment, it's selling at a very cheap. When you look at the PR ratio, you look at the dividend yield and everything, it's selling well. But
I also did see that their share price did depreciate by, I think they lost about 5 kobo on Friday, so to close at 8.65 kobo. So they didn't really do well as I expected following the news.
No, the news came after the market. And again, like I said, most of those news, you don't see the impact on the bottom line of Access Bank anytime soon. So investors are learning from what they've seen of previous acquisition. We've not begun to see those numbers roll into Access Bank and said, okay, fine, they are subsidiary in Africa. It's comparable to a bank like UBA. We are beginning to see the numbers from their offshore begin to come into UBA, and you see the bank is growing in terms of paying dividend to investors and others. So investors are looking, but for Access, it has just been acquisition. So they are looking at their long-term strategy. So they said in 5 years' time. So we've seen 2 or 3 years of those 5 years. So expectantly, any investor that is looking at Access Bank should be looking at it for the long term, not for the immediate term.
So with this acquisition now and our Access Bank expanding in Africa, Africa, we have the AFCFTA, and we are looking to, trade, amongst ourselves. Would Access Bank be a bank to position itself to aid, boost AFCFTA, and also the PAP system that we are trying to promote here to enable investors trade, between countries without having to be in that country or be a resident of that country to be able to buy shares? Do you see Access Holdings enabling this?
I think so. But again, the African Continental Trade Agreement has not started fully like everybody expected. Africans are still not doing business within themselves like what they do with European or Asian countries. So definitely, it's a strategy that Access Bank have said that they are trying to capitalize on. But as it stands now, that has not fully take off because of the challenge in terms of payment system. And that's what they are also working on. And then remember that the African Continental Trade Agreement is saying those products must be produced in your country for you to take it to other African countries. Then you have this tax incentive, and then that will make it cheaper comparable to other to what you get in Europe. That has not come to play yet. So they're still trying to, but I think what Access is trying to capitalize at the moment, they are trying to capitalize at the payment side. They are trying to build a strong, robust payment system whereby you can use Access in any part of the world, and especially in Africa, and make payment. That is where they are driving in most of the acquisition, in trying to synergize other markets with the banks there. So that's what they are trying to do now. That's their first priority first, once the African Continental Trade Agreement kicks up and keep up, I'm sure they are going to take part in it.
That's a very wonderful and interesting development to look forward to. I'll definitely look forward to that, and we'll see how that plays out in Africa and helps Africa trade, amongst themselves. Thank you so much, Mr. Mukhtar Mohammed, Chief Executive Officer, Finance with Mukhtar, for joining us on the program and sharing your perspective on the program.
My pleasure, always.